I put a poll out on the YouTube channel, and after one day it had 170 votes or something like that. And the question was, what do you reckon is going to happen in the future? Boom, crash, or stagflation? And quite interestingly, 3% said they reckon it's going to boom. And that kind of works in with my AI sort of boom hypothesis that could potentially play out in the future. Anyway, about 97% of everyone said they reckon there's either a crash coming or economic stagnation. I thought that was really fascinating. As a follow-up video to the Everything's Gonna Boom video, I thought I'd put out a video on, are we going to get stagflation? Is this a stagnant economy we're going to face for the next 2 or 3 years? So firstly, what is stagflation? Well, Ray Dalio describes it as an environment that's high in inflation, high in unemployment, and stagnant economic growth. So I just kind of wanted to use here as a base because Ray Dalio is obviously a really smart guy. One of the major things with stagflation is that the central banks get caught. They get caught between, okay, do we lower the rates and support the economy? Because if we do, obviously we're going to get higher inflation, which is what we saw in the COVID years. Or do we fight the inflation and do we put the interest rates up and punish all the poorer people in the economy? So I guess the right way to talk about it is they get stuck between a rock and the hard place, and their ability to influence or impact the broader economy is really limited. I had another video a few weeks ago about economic quicksand, where it just explained the average Australian's position is economic quicksand. Whatever they do, they're kind of stuck in that economic quicksand. And in this scenario, the central bank is stuck in economic quicksand, if you want to say it that way. Now, when it comes to Australia, there are a few unique things in our economy that's happening now with regard to stagflation. So the first thing I want to talk about is our K-shaped economy. And really this is over all Western economies, but the K-shaped economy is just a smart way of saying the rich are getting richer and the poor are getting poorer. It's this massive wealth divide that I've been talking about that's growing. Now they're making new names for it, like K-shaped economy. So what's interesting here is there are a few people, which is the top part of the K, the rich getting richer. If the government supports the masses, which is the bottom part of the K, those really wealthy people are going to get richer a lot quicker. And it's worth kind of touching on here because not a lot of people understand this point. It's a very basic point. It's that a lot of the country are living from paycheck to paycheck. Even if you reduce interest rates, it doesn't necessarily stop them from living paycheck to paycheck. And this is important because it doesn't mean their ability to buy assets have increased. But if you increase interest rates on the wealthy, well, the most wealthy people, it doesn't matter how much you increase interest rates because they've got relatively low debt. And actually what happens is that increase in interest rates just allows them to go and buy more assets at a cheaper price. Their disposable income left after their expenses doesn't really change that much. So the K-shaped economy is really important when we talk about stagflation because there's another massive thing that really impacts our economy, and that is the debt. The debt is the thing I've been talking about. It's kind of how I got into trying to figure out the economy, and it's central to stagflation. How I got into it was when I left the bank many years ago. I read this really great book, Secret Life of Real Estate and Banking with Phil Anderson. Interestingly enough, he talks about an 18.6-year cycle, which is due to end in 2026. Anyway, the main learning I got out of that book was that the property market is really reliant on the supply and demand of one thing, and that is credit. I went through this whole process. This took me years to figure it out because I'm not a quick reader or anything like that. But it got me to this point of where I had to understand enough of how money works. And that sounds funny because a mortgage broker, a lot of people would automatically assume that a mortgage broker would know how the money system works. Believe me, most financial professionals don't have much of an understanding of how the money system works. Anyway, I'm going to explain another basic principle that I don't think people really give it enough gravity. In Australians' case, I believe personal debt. Too much personal debt means interest payments go up. That's money that comes out of someone's bank account and it doesn't go into the economy. They don't spend it. It goes straight back to the bank in interest, and that money basically gets removed from the economy. So too much debt means too much interest, and over a period of time, the debt keeps going up. As we can see, it's been going up multi-decade, and basically that means it's compounding. That means there's less money every year going in, and that money can no longer compound. Why? Because it's compounding going to the banks in interest payments. That's why banks make massive amounts of profit. They're using this rule of compound, keeping people in debt for longer, and they're winning that game. Let me explain the debt in a bit of a different perspective. Australia's national debt in the coming financial year is going to hit $1 trillion. That's federal government debt. Let's say the interest rate on that debt is 5%. In reality, it's probably a little bit lower, but 5% is a nice, easy number for us to work off. That's $50 billion per year in interest repayments. You know, Australia's got a productivity problem, right? We could be putting $50 billion per year to work on maybe something that's productive, maybe some AI, maybe some manufacturing of high demand goods. Whatever it is, if we invested something, we can make stuff over a 10-year period of $50 billion a year. We can sink whatever that is, $500 billion into this industry. We can learn how to do things, and we can create productivity, and we can create money. But we don't get the compound of all that knowledge, all that innovation, all of that money. We don't. That's going to someone else, whoever we owe the money to. And that's the problem. The economy comes into this area where it's very hard for the government to now come in with fiscal stimulus. This is what stagflation is about, and a lot of people are saying, okay, well, this is looking like it's going to happen in America. In Australia, I'm not so sure, to be honest with you. I mean, we're only, I think, 45% government debt to GDP, which is actually relatively low. You look at America, which are dangerously high at, I think they're about 125 or 130% debt to GDP. But the bottom line is here for Australia, well, yeah, it does feel stagnant. And if at an individual level it feels really stagnant because, let's be honest, the government are fudging the numbers with immigration. That ability to spend all that interest money on stuff that's productive really puts a handbrake on the economy. Okay, so let's come back to unemployment. Unemployment, most of my viewers are going to be aware that the vast majority of the job creation over the last 3 and the last 5 years are created in the public sector. I think it's something like 80% in the last 3 years alone. What we don't see in that data is what about the jobs that government money has created, not in the public market sector. So things like infrastructure are not counted. And if you drive around today, there's plenty of infrastructure work going on. So we can make an educated guess that almost 100% of all the job creation in the last few years has been via the government. So no, we don't really have high unemployment. But the question is, how long can our governments, state and federal, keep playing this game, going to the money printer and creating more jobs? As I just said before, at the moment, they've actually got relatively low debt to GDP. So unfortunately, this sort of thing could go on for quite a long time where they don't want to print too much because they don't want to upset the masses. They can get away with continually printing and continually keeping the economy ticking along according to them. You might say that, well, it's not so bad. The economy is going to bounce back. But this may be just an opinion. I may be incorrect here, but I feel like all of this government jobs, all of our highly regulated HR laws, don't get me wrong, there's pros behind them, but I kind of feel like this is feeding into this whole low production. So let's look at this Melbourne tunnel that's just opened recently, or it's about to open. They had a fun run on the weekend. They love having fun runs when they open these sorts of things for some reason. I don't know how long this thing's taken to build, guys, but it feels like it's been at least 10 years. I think it's actually been 15 years if you take into account the fact that the previous Liberal government here in Melbourne had the other tunnel. They spent $1 billion on it or whatever it was. And then, who was it? Dan Andrews came in and axed that one, and then they've built this one. So that's the level of where our productivity is at. China's going to be building this in 18 months, easy. If you want to understand where we are as an economy competing with other economies for revenue, that's where Australia is at. I don't think that this can keep going on forever where the government keep printing money because Eventually it gets to the point where there's no productivity, we're not making anything, and we're just fudging the numbers. And a lot of people would say we're actually there already. Let's come back to interest rates. Let's come back to the RBA, the Reserve Bank of Australia. People remain employed in this environment. And so we are trapped between the government and the central bank, right? Because the government keep printing money to keep people employed. Actually, it's almost irrelevant about the printing money bit. They keep people employed. And what this means for the central bank is, well, they can't come to rescue the economy and drop interest rates. They're stuck. Why? Because people still have jobs. People keep spending. The only thing that's going to drop spending really quick is if people sit there and they go, hang on, if I lose my job and I don't get another job for 10 weeks, I'm going to not spend anything and save the maximum amount of money. But that's not happening because we've got relatively low unemployment. Pretty much everyone I know goes, well, if I lose my job today, I'll be able to get another job really quick. No one's really scared about losing their job. In fact, a lot of people are going, well, I don't really care. I'll probably go somewhere else and get better pay or better conditions or something like that. As a mortgage broker, I look at this and go, well, if the Reserve Bank do lower interest rates, you're going to get higher borrowing capacities. And that's what we're seeing, where I think this year they've dropped 0.75% off the rate. What that does is it reduces someone's expenses, so it increases the amount of money they can borrow. And we're seeing this with this relatively low unemployment and lowering interest rates. It all goes into debt. And what that does is it goes into house prices, which we keep on seeing. The RBA is stuck. Ultimately, we're in a place where there's no leadership here. Things are going to continue. What we need is strong leaders in our institutions, in Parliament, in the central bank, who are going to make some hard calls where there's going to be winners and there's going to be losers. Because the thing is, right now, there's already winners and there's already losers. The group of people that are winning are getting smaller and smaller, and the group of people that are losing are getting larger and larger. What I'd like to say about that is I've been talking about this for at least 3 years on this channel, and I can tell that group of people is getting larger and larger because I can see the comments, I can see the following growing. I can see the subscriber count growing as well. What it means is the good times are potentially over. If this stagflationary environment plays out, it can stick around for a long time. Just look at Japan. I would say if you're looking at this, and everyone has financial objectives, unless you're old or you're kind of got a wealthy family, you need to play into that. It's not 15 or 20 years ago when we could afford to make mistakes and the opportunities was there. Those times are gone. So it's not necessarily about getting upset or anything like that, although it is upsetting. It's about saying, okay, well, now what do I do in this environment? How do I position myself for this scenario playing out so that I can still achieve the goals for myself and my family going forward? There are generally 3 groups of people I've found affected by this. So the young people, the guys that have to get into more debt than previous generations. That's obviously a hard thing. I think property prices now in my area, your average property price is 800,000 or 900,000, almost unthinkable 10 years ago. Those guys are getting screwed really hard. They're stuck between a rock and a hard place as well, because what do? They stay living at home with mum and dad until their 40s, and then they've got to take on a 30-year debt. Do they stay renting and the landlord's just going to jack the rent up, or do they buy a property? There is no easy answers there. All I can say is that I sympathise with your position. I would look back and I would try to cut through the noise and say, hey, do I have the ability to pay for this loan? What if interest rates go up? Do I have a good job? What's the likelihood I would lose my job? Do I back myself to pay this loan off? Because honestly, the guys that bought at the top of 2009, they're not really too worried now about what happened back then. If that's you and you want to take the step and you want to figure out how to buy your property, I've got a masterclass, how to buy your first home in 2026. Links will be below. Please comment in the comments, first home buyer masterclass, and we'll get you the link. So there's those guys. There's people around my age, kind of in the 40s. They've also got a lot of debt. They got less debt than the first home buyers, but they've got more debt than what the generation before them did. They're sitting there going, oh shoot, you know, these kids aren't cheap. I'm working bloody hard. Are we even going to be able to pay this debt off in time? And life is so confusing. That's the thing. There's so much stuff going on, not just about the macro economy, just everything, like all of the text messages. I've noticed younger people just deal with that. Someone that's 30, but people our age, just less and less is just too much. If that's you, the thinking about the finance stuff is probably too much as well. I'm here to say that anyone can knock 10 years off a 30-year loan easily. I'll link below with a few videos showing you how to do that. And then there's a final group, and these guys get kind of forgotten. This is the kind of around the 50s and older, and people go, oh, you got all the assets and you got all this and you got all that. But it's not that easy. Like a lot of these guys, they've got kids living at home. They've still got debt because that's just the way it is. They've still got mortgage debt. And because the kids are living at home, the kids might be in their 20s or even their 30s, but they're still kind of dependent on the parents. So there's a bit of a drag, and it's impacting their ability to pay down their debt and actually fund their retirement as well. If you're out there, feel free to get in touch with me and just have a genuine conversation about where you are. I've had a lot of the audience do it, and the general feedback is that it's been a really good conversation. So I want to know what your thoughts are here. What have I missed? Am I being too pessimistic? Do you agree with the stagflation thing? Or do you think, you know, we're going to go into a harsh abyss and we're going to be punished for our sins in the coming year or so? Let us know in the comments. Cheers, guys.